Mayuresh Joshi also with us this afternoon. Mayuresh, I want to draw your attention now to Godrej Consumer. That's been the other key result of the day. Numbers were fine, margin expansion about 13.5%, 14% top line growth. But the question is, what do you pay and then what do you get for it? So is this price to perfection? Would you advise a fresh entry in Godrej?
Afternoon, Survi. I think the numbers were quite reasonable. And again, I think the domestic volume growth led by realizations, I think is something that drove the overall business. What probably disappointed within the African business would have been the South African performance. But again, I think the kind of strategies that Godrej probably has in place, the kind of new products and product innovation that it intends to bring to the table is something that can define the value creation, both in terms of volume growth for these new products, abetting the realization growth as well. For Indonesia in particular, I think the go-to-market strategy, and again, I think changing of their ad and PR guys, I think there's going to be some cost optimization on that front. For the India market itself, I think the middle Indian market, or the modern towns as they call it, along with innovative products, is something that will keep on driving the volume-led realization business for India. And what you probably have seen in the past few quarters in terms of the gross margins actually moving up, 35 to 40% of the delta probably came in through cost savings for the input cost inflation that we did not witness in that proportion that one expected. And the other was obviously cost optimization. For the African business particularly, I think the expectations that the management might carry through in terms of higher team growth on the top line along with higher EBITDA growth, I think that can be something that can drive the overall business. When it comes to valuations, I mean, even if I assume an EPS of around 28, 29 rupees, the multiples is in higher of around 43, 44 on an FY20 basis. So I think consistency in volumes and numbers is something that will drive the stock performance and re-rating. At the moment, I think our hold rating on the stock continues.
Joshi is still with us. Mayuresh, having seen so many earnings last few days, any fresh ideas that have come to mind? Anything where you're initiating a buy or going overweight post numbers?
So, Survi, I think the financials, specifically on the private banking front, were very encouraging. So, RBL Bank is something that will remain extremely sanguine about, both in terms of the advances growth, the strong accretion to CASA, and the strong capital adequacy, along with stable asset quality, probably resulting in better ROAs and ROEs. So RBL Bank probably remains one of our preferred picks. The cement companies, I think a select few have given a very stellar set of numbers. So again, out of the large cap names, the bias probably still stays with Ultratech, both in terms of the quantities or the capacities that it probably possesses at this point of time, and expectations of the added capacity with approvals expected to come through from Century Text.